Welcome to India Market Close, and it's been an interesting session, rather volatile but respecting important levels on the index, and that's what we saw. The day belonged to earnings and the markets were largely reacting to that. The breadth of the market was good and the broader markets have actually outperformed the benchmark index in terms of trade. That's what the Sensex and Nifty are getting up to. 22649 is what we have. Remember, 22,600 is an important level of support for the markets that seems to be well respected as we see it. So pretty much at a flat day in terms of what we've had. We've been volatile but in a very tight trading range. The Sensex as well trades high by about 120 points. It is the broader markets, like I said, that are outperforming the benchmarks. The mid-cap and the small-cap index, both trading with gains of nearly 0.5%. Small-cap index, though, on the other hand, trades flat. The mid-cap index seeing gains on back of earnings reaction. A couple of those counters are currently witnessing 210 points on the mid-cap index. Bank Nifty is having a bit of a sulky day. Remember, on Tuesday, it was a U-turn of sorts that we saw on trade with big gains on and record highs on Bank Nifty in the first half of trade. It was the second half on Tuesday that saw the markets do a U-turn, and of course the weekly expiry, the Bank Nifty continues to keep traders on their toes. In terms of the big movers and shakers, of course the last sort of closing looks slightly worse from where we started off this morning in terms of the breadth, but nevertheless not much to worry or complain about just yet. Power Grid is your top gainer, nearly 4% higher. OMCs are looking good from the word get-go, and that's what I highlighted early this morning on back of lower crude prices. Crude trades at a 7-week low on back of US rising inventory, and of course OMCs are a proxy play to crude prices. BPCL is up 4%, and it's a sweet move. It started off flat and has gradually gained as we've gone along through the day. Paint companies also not doing too badly. Bajaj Auto on back of those monthly numbers. NTPC, Tata Steel are having a pleasant day. M&M continues its upward journey. It was the top gainer on the Nifty on the start of opening today, but continues to have a solid sort of move up about 1.5%, building on to what we saw on Tuesday. On the sell side, it's Kotak Mahindra Bank that gets another blow with its joint MD stepping down. Bharti is having a weak day. Wipro had a pretty big order win, but tech seems to be in a bad mood in today's day of trade. So the whole tech pack is trading slightly lower as we see it. HDFC Life, as is ICICI Bank, Titan, of course, are some of the other mild losers in terms of trade. But like I said, the action is across the broader market. Stocks like REC, PFC, Power Grid are the ones that are reacting pretty well to earnings, and the party in that space continues to catch our attention as we go into the last 45-50 minutes of trade today. But it was the Adani pack that has been reporting pretty fantastic numbers, to say the least. Let's go across and hear out what the management of Adani Ports has to say as they lay out the road ahead for the company in FY25.
APSEZ has delivered its strongest ever operational and financial performance in FY24. We have outperformed against the cargo, revenue, and EBITDA guidance provided at the start of the year by 6 to 8%. Thanks to our customers, shareholders, and other stakeholders for maintaining their firm confidence in APSEZ's business. Some highlights of the year gone. Firstly, on ports. APSEZ handled 420 million metric tons of cargo in FY24, which is 24% year-on-year growth. In India, our cargo volume grew by 21% year-on-year, which is 3 times the average Indian cargo volume growth rate, hence contributing significantly to India's growth. Given the sweating of assets, our domestic ports business EBITDA margin expanded by around 150 basis points to reach 71%. Next, our logistics business. The rail volumes jumped 19% year-on-year to reach around 0.6 million TEUs, while bulk cargo volumes increased by 40% to reach around 20 million metric tons. During the year, we launched the trucking business segment with a fleet of around 900 trucks to provide last-mile connectivity to the customers from ports, ICDs, and customer premises. Now let me discuss the financials for the full year. Our consolidated operating revenue increased by 28% to reach rupees 26,711 crore. The consolidated EBITDA, excluding Forex, grew by 24% year-on-year to rupees 15,864 crore, and the profit after tax jumped 50% year-on-year to rupees 8,104 crore. Talking about our leverage, despite a capex of over rupees 7,400 crore during the year, our net debt to EBITDA ratio improved to 2.3x, below our guided range of 2.5x. An update on annual dividend. For the financial year 2024, the APSEZ board has recommended a dividend of rupees 6 per share in line with our capital allocation policy. This implies a payout of around 1,300 crores. APSEZ continues to enjoy an investment grade rating from global third-party rating agencies. One of the Indian agency, CARE Ratings, has assigned AAA to APSEZ, making us the first private corporate infrastructure developer to be rated AAA. While S&P and ICRA upgraded the outlook of APSEZ to stable from negative during the year. As of year end, APSEZ is present across 15 ports in India, 4 ports internationally, and its logistics base include 127 trains, 111 tugs, 900 trucks, 12 MMLPs, agri-silo capacity of 1.2 million metric ton, and 2.4 million square feet of warehousing. Looking at the current financial year, that is FY25, with an increase in our customer base, increase of our revenue streams like trucking and operational excellence, we expect cargo volume in the range of 460 to 480 million metric ton, revenue within 29,000 to 31,000 crore, and EBITDA in the range of 17,000 to 18,000 crore, while investing a capex of rupees 10,500 to 11,500 crore for future growth. Our net debt to EBITDA ratio is expected to be around 2.2 to 2.5 after factoring the capex and the scheduled loan repayments. We look forward to another great year ahead. Thank you.
Okay, that's the commentary coming in from Adani Ports. Let me quickly welcome on board Nagaraj Shetty, HDFC Securities, to talk to us about markets. Nagaraj, tell us, how are you viewing markets at this point? What should one do?
Hi, Hersh. Good afternoon. Nifty has been in a consolidation mode at the resistance, no doubt about that. At 22,800, 850 is going to be a strong resistance of multiple highs and trendline resistance, channel, upper end of the channel, and important Fibonacci extensions comes around 800 to 850 levels. So there is a possibility of a consolidation, some more weakness in the next 1 or 2 sessions. And at the lower levels, 22,300, 250 is going to be a good support for the market. So major trend, intermediate trend remains up for the market, currently showing consolidation placed at the higher levels. There is a possibility of some more consolidation or a minor dip down to another 200 to 250 levels points at the lower levels, and Nifty likely to bounce back from the lows.
Nagaraj, what's the trade on Bank Nifty after what we saw on Tuesday? This afternoon as well seems like it's still finding its feet. With the weekly expiry as well, how would you approach Bank Nifty at this stage? Consider going long in this time of consolidation that it's going through?
Are you asking about the Bank Nifty or Nifty? I just missed out.
Bank Nifty.
Yeah, Bank Nifty. After a stellar movement a few days back, Bank Nifty has been consolidating. If you look at the chart pattern over the last couple of sessions, we have seen some selling pressure building up from the higher levels, from near 50K in Bank Nifty. But I'm not expecting any bigger decline from here onwards. I think buy on dips opportunity is there for Nifty as well as Bank Nifty. 48,500, 48,700 is going to be a good support for the banking sector on any dips from here. I think it is going to be a buy on dips opportunity.
Okay, Nagaraj, and we had the management of Adani Ports on the channel. Obviously, the type of guidance given is quite bullish for FY25. They're planning 460 to 480 MT in terms of capacity for FY25, so quite strong, and on top of very strong FY24 as well. What's your sense with regard to this one?
Adani Ports has been in a range-bound action over the last couple of weeks, and we have seen its intermediate trend remains up. We have seen some higher tops and bottoms on the daily and weekly chart, indicating that the main trend is up, remains currently showing a consolidation patterns, and today making an attempt of moving above the immediate resistance of around 1350, 1360 levels. Once it breaks above that level, 1410, 1420 going to be the next resistance for these stocks in the near term.
Okay, thanks for that, Nagaraj. Let me also bring on board Sunny Agarwal of SBI Cap Securities. Welcome, Sunny. Good afternoon. With regard to Adani Ports, your views, given the kind of numbers that they've posted FY24 and what they've put out in terms of expectations FY25, the margin improvement is also significant.
Good afternoon and thanks for having me on the show. I think the entire infrastructure sector, including port, is going through a very sweet spot. So we have seen the port volumes have increased consistently over the last 3 to 6 months. And I think Adani Port, being the largest port operator with close to 30-35% market share, they are definitely likely to benefit. And based on the recent numbers and commentary, I think we continue to remain bullish on Adani Ports with a medium to long-term investment horizon.
That's of course the word coming in Adani Ports. Adani Enterprise are both trading with a marginal gain, 1 to 1.5% high. Nagaraj, as we go into the last 45 minutes of trade, do you have any trading strategies, any calls on the long short side for the May series?
Yeah, I have a couple of long positions. If you look at the mid and small cap segments, they are continuously moving up. They're into a new all-time highs. There is no any sign of any tiredness in the broader market indices like mid and small cap 100 of NSE exchange. I have a couple of stock picks. First one is Wellcorp. If you look at the Wellcorp, has been in a range-bound action in the last few sessions. Today, made an attempt to move above the range, currently placed in the hurdle of around 590-95 levels. Once it moves above, currently trading around 599, I'm expecting this upside momentum to continue, and the next upside target would be around 635, 640 levels initially, and one can place a stop loss at 575 levels. And the second is DBL, Dilip Bitcoin Limited, has been in a range-bound action. He made an attempt of upside bounces. Immediate resistance is around 500, currently trading around 465. One may look to buy at this point of time. It can move towards 495, 500, which is the next set of resistance for this stock price, and 445 is going to be the stop loss.
Right, but the stock of this week is, I think, REC and PFC. The twins have actually had a pretty good run. REC reported earnings around market close on Tuesday. Even before that, the counter was up 10%, and responding positively to those numbers, the stock is up 9%, made a new record high earlier today. Well, let's hear what the management had to say. My colleague Vikas caught up with the chairman and MD on the key growth drivers in the quarter gone by and what lies ahead as we gear up for FY25.
The year 2023-24 has been really a fabulous year for REC. We have been able to achieve the highest ever profit after tax, about 14,019 crore. Last year our profit after tax was 11,055 crore. The main factor which has contributed to the significant growth of REC is our major focus on renewable energy segment. Last year we were able to sanction project worth 1,36,000 crore of renewable energy projects, and we are targeting that our renewable energy portfolio should increase to about 30% of our asset under management by the year 2030. So we are targeting that. Right now our asset under management is about 5,09,000 crore. By the year 2030, our asset under management will grow to about 10 lakh crore, and out of that 30% will come from renewable energy portfolio. Second is that another factor which led to the phenomenal growth of REC was Improvement in distribution sector. Government of India, Ministry of Power has taken huge reform measures. They brought revamped distribution sector scheme, late payment surcharge rules. This has really contributed in turnaround of the power sector utilities, particularly the state sector.
Right, management of REC continues to be decently bullish, 15 to 18% kind of growth number given. Nagaraj, let me come to you first on the technicals. What really explains the kind of move that we've seen over the last couple of days at least, nearly 20% up on both REC as well as PFC?
Yeah, first look at REC. What it was going on is the larger range bound action over the last couple of months. Technically speaking, there was a resistance around 460, 465 levels, and the stock has been finding resistance of the downsloping trend line. Technically, we believe whenever the repeated hitting of the trend line resistance or whatever hurdles eventually results into a breakout, decisive breakout. This is what exactly happened in the last 1 week. A 20% move above the level has happened. So this is phenomenal, and I am expecting this upside momentum is likely to continue. Having moved up recently sharply, there is a possibility of some consolidation. There is a possibility of some range movement. I'm not expecting a bigger decline from here onwards. A small dip is going to be a opportunity, and eventually this stock could move towards around 580, 590 levels, which is the next set of resistance for the period of time.
Okay, point taken. Sunny, if I can come to you with regard to fundamentals, this one's trading now at 2 times trailing, maybe 1.7, 1.8 times 1 year forward, around 15 to 18% growth, but the key being recoveries. What should one make of this? Because it's trading at its life highs in terms of relative valuations. Lows, maybe 10-year lows in terms of dividend yield. Of course, recoveries in the pipeline. You think any more juice left in this one in terms of value?
Yeah, I think we continue to remain bullish on REC from a long-term perspective. The reason being that with their AUM close to now 5 lakh crore, I think the management has aspiration to take this to 10 lakh crore in 5 years. So that's near close to 15% kind of figure as far as the loan book growth is concerned. One of the positive factors which is working in favor of REC is the continuous improvement in asset quality. So I believe that maybe by the this fiscal year end FY25, I think asset quality will further improve, and we may see a very near negligible NPAs in REC. And obviously the growth driver is a renewable energy portfolio. In terms of valuation, yes, I agree. Trading close to life high in terms of valuation close. So as per our estimate, it is trading at 1.6 times FY25 price to book. But if you compare other power companies like IREDA, which is trading close to 3.54 times price to book, I think there is still some juice left in terms of re-rating as far as REC is concerned. So our fair value for REC with a 12 to 14 month investment horizon is close to 620 rupees per share. So any deep is an buying opportunity in a medium to long term.
Understood. And Sunny, if I can just take your view with regard to just recoveries, what's the kind of recovery number you all are penciling in with regard to REC for FY25?
So I think I don't have that number handy right now. Sure. Just give me a moment. I will get back to you on that.
Sure, no worries. So probably post the break. Thanks so much, Sunny. Stay on, of course. We'll slip into a very, very short break. On the other side, we have the management of Dabur India with us live. Stay tuned to NDTV Profit. Welcome back. You're tuned into India Market Close here on NDTV Profit. Quickly want to take you through a couple of stocks which are really making news and moving in trade today. One of which is Kotak Mahindra Bank. On the back of KVS Manian, who was elevated to joint managing director at Kotak, and him stepping down and possibilities of him being linked to Federal Bank as well. A stock taking a bit of a tanking, 2.5% lower, on top of the 10% that it's already done after the embargo put in by the RBI. Want to quickly try and take Sunny, your views first off with regard to Kotak. You know, just how critical is Mr. Manian as a cog in the leadership? Do you believe that this materially shakes up the proposition that Kotak Mahindra Bank had in terms of an investment?
I think, obviously, it's a bit shocker that post recent promotion and of the management and leaving, definitely there is some vacuum in terms of leadership. But what I feel ultimately, organization is something which is run by the group of people, and I think Kotak is a well-run institution. I think today's reaction is a knee-jerk reaction. So somebody else will definitely lead the bank, and again, I think it should not be an issue as far as growth is concerned for Kotak. And even assuming an hypothetical scenario that Mr. Manian is going to a Federal Bank, which is what the street is expecting. We all know that Kotak is also on prowl to acquire a small regional bank. You never know that going forward, Kotak may go and acquire the Federal Bank, and again, Manian will be back in the Kotak fold. So I think, let's see, I think it's a knee-jerk reaction today. Management change is a part and process of any organization. I don't think so. That's a big blow as far as business growth or any business-related aspects are concerned for Kotak.
Right, it's a knee-jerk reaction. Nagaraj, another corporate action that I want to get your view on is the realignment of the Godrej brand, or the family rather. Now, what we are seeing today is all those Godrej counters seeing a cut of 6 to 7% each. In my opinion, there is no breakdown on the charts of any sort. This is a fundamental news trigger that came out of nowhere, and the stocks have corrected. Do you think this becomes a good opportunity for a trader to pick up maybe a Godrej Properties, a Godrej Industries? Of course, if there is no breakdown of any important support levels.
Yeah, for Godrej stocks initially, if you particularly Godrej Industries has reacted. So most of the Godrej stocks have reacted from the swing highs, and I think it's going to be a correction for a shorter term. I'm not expecting any bigger decline. Some more weakness is likely, especially for Godrej Industries. Next lower support will be around 820 to 830 levels.
Right, that's the call coming on Godrej Industries. Sunny, do you make anything of it? I mean, I believe minority shareholders would not be impacted because this has been done with a lot of finesse and respect, to say the least, and probably becomes a blueprint for other corporates to follow in terms of realigning or succession planning. Fundamentally, any impact on Godrej Properties or Godrej Industries in your opinion?
I think there is no fundamentally, there should not be any impact as far as normal business operations is concerned. Since I think this entire dispute has been resolved amicably, and all the key listed companies continue to remain with Adi Godrej and Adi Godrej Group. In fact, that will clear a lot of overhang pertaining to what can be the outcome of this family split. So I think once this outcome is behind us, I think maybe today's knee-jerk reaction. From tomorrow onwards, we may see market again going back to discussing the business growth, and accordingly, stock price will react. So I think I would like to add a few companies from the Godrej Group in my portfolio, especially holding companies like Godrej Industries, which is trading at a significant discount to the holding which the companies have in the other Godrej Group. So I think even Godrej Consumer, I think the company is growing at a relatively faster clip as compared to the other peers in the FMCG industry, and is well placed to report a decent 12 to 13% kind of earning growth. So I think it's a good opportunity to add quality businesses in the portfolio.
Right. good opportunity to add some of those Godrej names so far.
Sure. Also, you have Adani Enterprises, those numbers flashing at the bottom of your screen. Revenues up roughly 1% or thereabouts on a consolidated basis, coming in at around 29,000 odd crore. Also, you have profit after tax slightly lower than what was expected. Of course, those numbers trickling through as we speak. The stock absolutely flat as we speak, just about slight positive bias coming in, flickering between the red and the green at the moment. Also, let me quickly switch focus to Dabur India. We have Ankush Jain, who is the CFO at Dabur India, who joins us. Of course, Dabur's numbers also, and you can see the spike on the stock price. Ankush, first off, welcome to NDTV Profit. Good having you here. Good afternoon. Just wanted to quickly try and understand and break down. Gross margins gotten roughly 300 basis points better. You're expecting this to sustain through FY25, the kind of flattish kind of tone in the material cost?
Good afternoon to you and all your viewers. In fact, this year we saw almost 270 basis expansion in gross margin, which was, it was really good, and we have almost reached pre-COVID levels in operating margin. While this year has been deflationary, and we had also stepped in our cost saving and value addition initiatives, next year, I think a bit of inflation will set in, but our sense at this point of time is that H1 probably may remain muted inflation. But from H2, there might be a bit of inflation. Having said that, with the various initiatives which we are taking in the organization, especially identifying inefficiencies, value levers, redefining every value lever in the organization, I think we should be able to protect our margins. We are, I think, quite a bit of confident in that at an annual level. There may be some blips quarter by quarter, but we should be able to protect our gross margins and, in fact, slightly increase through the initiatives we are talking about. Yeah.
Okay, that's good to hear, Ankush. So if there is a chance or a likelihood of an upside surprise on margins for FY25, that could be a little bit of a relief for the street. Let's talk about top line. You've reported mid-single-digit growth on your revenue, and that comes as no surprise because when you did that business update about a month ago, that was the expectation that was laid out. But rural demand seems to be your trigger going ahead as well. You want to break that down for us? Tell us what's driving growth, and if FY25 we could see a pickup in rural demand and potentially go back to double-digit growth.
Yeah, in fact, there have been some green shoots, visible green shoots in rural demand. It has been a bit of sluggish, in fact, declining demand in rural over the last 3 years. This is the first quarter in last 3 years where rural has marginally outpaced urban, by almost 100 bips. Over the last 3 quarters, it was lagging urban by almost 300 to 400 bips, which was putting pressure on many FMCG companies, especially us as well. Having said that, with these green shoots, and we are better placed because our distribution is increasing, our reach is increasing, we're adding more villages, so it augurs well for us. Especially with, I think, normal monsoons expected, election season to end soon. The government will continue to its infra, spending and all. So this should augur well for us as an organization, and we are optimistic on that.
Now, Ankush, break this down for us, right? So while you're optimistic and growing revenue is going to be a key objective for Dabur in FY25, will that come at the cost of profitability? So any price cuts, rollbacks? This is staples that we're talking about. So the universe is fairly price sensitive.
Yeah, in fact, as an organization, we have not resorted to price cuts even in a deflationary environment last year. And we don't think so because what we sell is mostly, branded and we hold leadership positions. For example, Chyawanprash, honey, or air fresheners, or even, tooth, oral care, etc. In fact, we command premium and therefore probably, there is no need for price cuts. In fact, we will be offering more premium offerings to consumers, especially the affluent, consumers being urban. driven by modern trade and e-com. So price increases will continue wherever possible, but also there will be more focus on cost optimization, and therefore that should drive margins, and that should release funds for us to redeploy it back for demand generation as well. So I think we are better placed, in coming year.
Sure, Ankush. With regard to cost optimization, I want to try and understand where this will come from. Your ad spends in particular, and I want to try and club these two questions, are up roughly 33% for FY24, 20+% for Q4 alone. Would ad spends be one of those expenses which would materially change, and where would that number be at?
Okay, so first of all, we don't classify ad spend as a cost. It's an investment, it's a demand generation investment. So that our priority is to wherever there are efficiencies in an organization, they are partly flown to the P&L and partly to redeploy, and partly redeployed to generate demand in the form of higher ad spend. Now we had in the past, we in the last year have increased it to almost 8% in India. We intend to increase it, provided there are more, price saving opportunities, or price increase opportunities, and cost saving opportunities. But having said that, opportunities would be more in the value chain. Whether it's packaging cost, whether it's supply chain cost, whether it's people cost, whether it's factory cost. Those cost efficiency programs will take precedence next year, and a lot of efforts have already gone in the past.
Sure. So
I think we will start yielding results shortly.
Sure. So this kind of a 20% kind of a run rate, 20 to 30% on ad spends set to continue for next year. Is that what one can expect?
I can't say with certainty, because that will also depend, and because it's slightly dynamic. Why? Because sometimes when demand is not there or it's muted, then you resort to more, more point of sale, more consumer promotions on ground, etc. So you have to rebalance between media and between e-com and modern trade, spends. So while overall will grow, but I don't think so in this line. 20% is 25% is relatively high. So it should be slightly ahead of top line.
Last off, Ankush, so what I make of this is it's going to be a twin engine. One is going to be your revenue is going to go up, your OPEX likely getting more efficient, if I can call it. Therefore, margins, where should that trend towards?
So before I answer that, first of all, just for clarity, our operating margins today on an adjusted basis is 20.2%, which is pre-COVID, which were almost a peak of 20.4. So it's almost there. Going forward, all upsides in margins, our thumb rule would be, I'm just saying thumb rule, 75% should get back into redeployment into media spend, and 25% of that, any expansion in efficiencies, should flow back into the P&L.
Ankush,
and that will have to be calibrated quarter on quarter.
Ankush, talk to me about exports, because I think that's a space that's doing well for you. Double-digit growth on the export business. What is the contribution of exports in your top line, and what are you guiding for in terms of export growth for FY25?
Yeah, I think exact guidance, may be difficult at this point of time, because it depends on specific orders also. But we have stepped up our capabilities, both in terms of operations and people, to take, because India is, with Make in India concept of the government, India is becoming a preferred source of supply, and also with good quality. So most of the European countries and US countries are looking for exports from India. And we export almost all of our HPC products, and even a slight bit of healthcare, but majorly, home and personal care. So it should grow, continue to grow, and it's a combination of not only our branded products, but it's also a bit of, private label for certain big institutions in US, especially.
Can you quantify what that could be like internally? What is the growth on exports you're working with for this year?
we are working for almost double-digit growth.
Okay. Also, one quick vertical that's actually done quite well for you is oral care, which that portfolio has grown at 22%. Have you managed to aggressively increase market share in that business?
Yeah, market share has increased, by almost, I think, 10 to 20 bips, if I remember it correctly. So it's increased. And also, very important point in oral care is that we have become now the number 2 player in the country. And an interesting information that the penetration is more than 50%, which means that every second household in the country, and that's a big number, every second household in the country uses one or more of Dabur oral care product. So therefore, that means in future, when they learn Dabur product oral care, it's going to be better for us, and the growth trajectory should continue.
Sure, Ankush, 3.3% higher on Dabur. So clearly that positive reaction coming in. But last quick question with regard to value versus volume and how pricing is evolving, maybe a couple of those points if you can help us with regard to FY25. You believe stable pricing, and what would the value versus volume kind of numbers look like in your view?
Yeah. See, very difficult to exactly dissect and give guidance, but I think next year it will be mostly volume-led, and so it will be more skewed towards volume than value, than pricing. So if I were to want, give broad, very, very broad guidance, it should be 2/3 volume and 1/3, value, or slightly even more towards volume for next year.
Excellent. Thank you so much, Ankush, and wishing you as well as everyone at Dabur all the very best for FY25. Thank you for this.
Thank you so much.
Right. Time to slip into a very short break. More on the other side. We'll bring you top buy-sell ideas as well as picks and everything in the derivatives market, all of the updates. Stay tuned. Welcome back. You're watching India Market Close here on NDTV Profit. I want to quickly take it across to Agam, who's standing by with a breakdown of the F&O cues for the day. Agam, we're probably just about 20 minutes from close. What's the F&O data indicating?
Well, a quiet expiry, Hersh, something that we were not expecting, but that's how things are panning out. Of course, the other positive is that the index continues to advance, continues to move up, even though it's up marginally. We're once again above the mark of 22,600, and there has been an increase in open interest in the Nifty futures towards what looks like longs at the moment. The Bank Nifty futures will also be in focus, considering that has also seen a decline by around 0.3%. So it is essentially the Bank Nifty. A lot of that is on account of the weakness in Kotak Mahindra Bank, but the open interest has also declined, so long unwinding coming through in the Bank Nifty. Moving on to your options market, of course, today was the weekly options expiry for the Nifty, and we were keeping an eye on 22,600 and 22,700, and that's exactly where we are expecting the Nifty to expire in today's day of trade. Moving on to how things are panning out when it comes to stocks. We do have REC, which continues to climb up 9% now at the moment. India Mart is the other one, which is also looking at longs based on, earnings coming through. Godrej Properties, Hindalco and Pidilite, among others, which are seeing shorts. And, of course, about a short covering for Canfin Homes, RBL Bank, L&T Technologies, Ambuja Cement, as well as Berger Paints. So a lot of these counters continue to be in focus. All in all, a good day of trade as far as the Nifty is concerned.
Okay, thank you so much for that, Agam. Let me also quickly introduce Jay Bala from Cash the Chaos. He's joining us as our technical guest for the afternoon. Good afternoon, Jay. Jay, let me come straight to you. India Mart, that one is up roughly 8%. With all the financials in focus, that one seems to be slightly more ignored. Talk to us about what that's looking like on charts.
Yeah, it's trying to find a base around 2,500, and it's developing an interesting pattern out there. The fact that it's trying to close about 2,700, it's a positive for it. There's a small inverse head and shoulder breakout for it. So if the stock can maintain about 2,500, I think the potential for the stock is about 3,100 to 3,200. So yeah, positive setup there.
Okay. Sunny, any views with regard to something like an India Mart, the way it's looking extremely strong after everything that's come out?
I think a very robust set of numbers reported by India Mart, and so what we have seen is that for FY24, EBITDA is up by 28%, net profit up by 24%, and for Q4 also, net profit is up by close to 80% and have reported a very strong set of number, 100 crore number. Cash flow from operating activities has been pretty robust, up 25% to 60 crore, and to that extent, Street is rewarding the company in terms of stock price. We continue to remain bullish on India Mart.
Right. Sunny, outside of auto, you also have something like a power grid doing very well. All of the power stocks, in fact, PSU stocks are doing fairly well in trade today as well. Do you see some amount of value still left in these? Something like a power grid, something like even an HPC and BPC are doing very, very well.
What I feel is that the way India's power demand is shaping up, I think the power sector is well in place for a structural run for at least next 3 to 5 years. And to that extent, they are also supported by the very robust set of numbers. Coming particular to the REC, I think reaction followed by a pretty strong set of numbers. HPBP, IOC, I think again, because the crude prices have corrected, and to that extent, we are seeing a correction over there. In terms of power transmission, companies like Power Grid, yeah, definitely, I think, although we have seen one leg of regretting in those kind of companies, but what I feel is that the way power infrastructure is setting up in India, whether it is on generation side, distribution side, transmission side. I think the transmission sector is also in a sweet spot, but I would like to ride that sector through transformer rather than transmission. So companies like CG Power, Voltime Transformer, these are the few companies where we have seen a robust set of numbers also, and since they are one of the leading transformer manufacturers, they will continue to report a healthy set of number over the period of medium to long.
Sure, thanks for that, Sunny. Let me switch across to Jay. Jay, just with regard to, I want to talk about one sector in particular, the Nifty Realty. Just if we can pull up the intraday chart for that, you'll see what I'm talking about. The Nifty Realty took a nosedive all the way till noon today, and the recovery after that has been phenomenal. What do you make of this? What does this signify? What does this mean?
Yeah, such volatilities tend to come around markets, when they're trying to change their trend. And Nifty Realty Index has got a huge resistance around the 1,000 mark. And if you see the daily time frame, the charts of Nifty Realty Index, we see closest at end somewhere near where the market started. That's another signal the markets are stalling. So once the index were to come very close to 1,000, I think it will complete a positive structure. There's a possibility we even completed something yesterday. So if the nearest support, that's about 915, if the index were to close below 915, that will signal the end of the move that started from 2022. I've been bullish on this since the middle of last year, but now this is getting a little bit long in the tooth. So watch out for resistance at 1,000 and watch for a close below 915 for a medium-term investor to signal that you should be taking profits.
Sure. Jay, before I move on to the auto sector, which is the top gaining sector today, I want to quickly take your views with regard to a Kotak Mahindra Bank and a Federal Bank. Tale of two different banks going two different ways, but one person in common. So talk to us about what do you make of both of these on charts?
Yeah, if you recall our conversation from the 4th of April, I had given a shot on Kotak Mahindra Bank, and I said it's heading towards 1,000 over the next several months, not in one shot. And the intermediate stopping point for me was 1630, and the stock actually stopped at 1620, and it bounced back and going to the next level of 1430. So there's a huge double top pattern that's playing out for Kotak Mahindra Bank. That's the reason why it's heading for 1,000 over the next several months. So the bounces are likely to get sold, and this is just the probably beginning portion to middle portion of the move. When it comes to Federal Bank, it looks good in the very short term, but from a medium to slightly higher, longer time frame, I think it needs a little bit of rest. So while it can stretch somewhere close to 175 to 180. I think that will probably exhaust the momentum that's been driving the stock from the recent low of about, say, about 120. So the stock needs a medium-term correction, consolidate, and then resume its long-term move.
Okay, some bit of caution with regard to Federal Bank and Kotak Mahindra Bank. But let me switch over. Auto sector, buzzing in trade, Nifty Auto up over 1%, comes after companies reported their April numbers. Puneet joins us with a look into the April auto sales numbers and what the key takeaways are. Puneet.
Hi, thanks for that. So post-March, generally we see a very quieter April this time. But the thing is, we've seen a lot of pockets within these segments doing pretty well. And the key commonality between all of them is the rural theme. So let's start with the two-wheelers. They've shown really stellar growth led by Hero MotoCorp, up 35% compared to the previous year. It has blown past analysts' expectation of roughly 20 to 22% growth that they had anticipated. Now, the company has said that the 125cc Extreme has been doing well, while they've also started deliveries of the Harley and the 400cc, which has also been gaining traction. Going forward, we see that TVS Motors taking a stellar performance from the previous year into the financial year of 25 as well, showing roughly 25% growth, much above analyst expectation of 17%, while Bajaj Auto has shown growth in domestic as well as its export market, which was down 10% for the whole financial year last year. So do note for Bajaj Auto also, they are looking to launch the Bajaj 400 in this weekend itself. So a lot of updates on that as well. And finally, Eicher Motors finally crossing the 80,000 sales mark per month, coming at a 12% growth compared to the previous year, also blowing past analyst expectations. If you look at the CV market as well, the CV business has also done well for most companies, but Tata Motors has been the stellar performer here. The expectation was roughly 2 to 3% flat growth. The company has shown 31% growth. And if you look at a little more deeper into the numbers, the passenger carrier as well as the ILCV, which is the interstate transmission transport modes as well as vehicles, those have gained 100% from the previous year, showing stellar growth. Finally, the divergent trend here, Ashok Leyland showing 10% growth, which generally does. The bus market has grown 100%, but VECV has been surprisingly degrown by 18%. So we'll watch out for more commentary in the earnings call for Eicher. And finally, clocking it with the PV volumes, Mahindra is the key winner here, showing 18% growth. The Bolero does very well in the rural as well as the suburban markets, and they've also launched the 3XO, which is in the compact SUV space. So really strong set of numbers for some players. Some have missed expectations, but a strong momentum going forward as well. Back to you.
Okay, thanks for that, Puneet. Pretty comprehensive. Let me toss it across to Sunny. Sunny, with regard to the numbers itself, what were the key takeaways for you from these April numbers?
I think the key takeaway was, first of all, we have seen a decent recovery as far as commercial vehicle space is concerned. So that was one area which it was expecting that ahead of election, we may see a kind of muted sales volume. Although looking at April sales number, it seems that even commercial vehicle sector is bottoming out. And to that extent, we are seeing today a reaction in Ashok Leyland also. So I think commercial vehicle is one space to be in. And second important sector to note is two-wheeler. So we have seen a very robust set of number in two-wheeler segment, both on domestic as well as export side. So that was a key thing. Passenger vehicle, we everyone knows that FY24 ended on a very high note, close to 3.9 million vehicles. And on the top of that, the industry is likely to grow 5% in terms of volume for FY25. However, certain players like Mahindra and Mahindra are likely to outpace the industry growth. And especially with an SUV portfolio under its fold, I think even on margin front, we will see a margin improvement as far as Mahindra is concerned. So I think Mahindra and Mahindra is a clear winner on passenger vehicle side. Even on tractor side, although the volumes continue to remain muted, but with an expectation of robust monsoon, a normal monsoon in beginning June, I think tractor companies are also looking good. So companies like Escort and Mahindra again, both the companies look good from a tractor segment.
Sure. Jay, just with regard to M&M, and I want to take a cue from what Sunny said, 6.5% higher over the last 5 trading sessions. It's indeed doing extremely well from an investor standpoint. What should one do? What are charts indicating?
Yeah, Mahindra is looking a bit tired, and it's it's something that you need to trail your stop loss at somewhere close to below 2,000 mark. If you want to look at new auto names, you might want to look at something like Munjal Auto or Munjal Showa. They have not yet moved, and so likely to play catch up, just like how Ashok Leyland is doing. But at the moment, I don't have a buy signal on neither of these names I've mentioned, Munjal Auto or Munjal Showa. But I anticipate something to come. But so be prepared for it. And the move in Escort's Kubota, it's extremely powerful. Despite the sharp rise, it's still got considerable amount of movement left.
Sure, Jay. Also, 5 minutes from close, BTST, any ideas?
Yeah, I like Schaeffler India. It's more like a positional trade than a BTST. With a stop at about 3150, I'm expecting this stock to about scale somewhere close to 5,000. And the fact that it's trying to close about 3,600 and change, that is going to be the highest close for the stock in several weeks now. So that's having a closing breakout. So it's likely to see a follow through. And I also like Dr. Reddy. It's a slightly defensive name. Dr. Reddy with a stop loss about 5080 for a price objective of 6,800. And you can even play this as a BTST with the stop is about 6150 for objective about 6400.
Okay, quickly switching focus to earnings. We had plenty of earnings candidates. You also have something like a Coal India. Let's pull up that stock. What is it doing? I think around 0.25% lower for Coal India as we speak. But yeah, that's where we're at. A bit of a gash there that we see in the last few minutes. But numbers expected nonetheless. So keep your eye out on Coal India. And you also had something like a Federal Bank come out with its numbers. Decentish set. Stock up 3%, likely on numbers, plus, of course, some amount of reports, including our own sources, suggesting that there's possibility of KVS Manyan going to Federal Bank. Sunny, very quickly, just on fundamentals on both of these counters with regard to Federal Bank and Coal India, your views, and between these two, something that you would pick?
So Federal Bank has come out with a very robust set of numbers. So I think close to 150 crore was one of expense in the Federal Bank number. If you net that off, I think a very decent set of number. And even management has guided that for FY25, the credit growth is likely to be in the band of 18 to 20%. NIM may expand, especially in the second half of fiscal year 25. So I think we continue to remain bullish on Federal Bank, trading at a reasonable valuation. And at the same time, Coal India, although numbers are due today, what I feel even Coal India is trading at a very reasonable valuation, 8 to 9 times price to multiple. We have seen a decent uptick in the volume as far as Coal India is concerned. And at the same time, the dividend yield continue to remain very high as far as Coal India is concerned. So somebody with a value buyer can look at a Coal India, and a growth buyer can definitely look at Federal Bank.
Okay, thank you so much for that. Both Sunny as well as Jay, thanks for all of your views over the last half an hour to 1 hour. It's good having you guys here. Thank you. But we're in the last minute and a half of India market close. And let's quickly look at where the indices are settling. Can we pull up the Nifty Bank as well? To try and figure 1/3% lower on the Nifty Bank. Let's pull up the heat map. Auto obviously leading the pack today. Clear leaders. You have something like a Bajaj Auto up 2%. You have Tata Motors up as well. But outside of that, let's look at some PSUs. BPCL 4%, Power Grid 3.5+%. You have SBI Life up nearly 2% plus, NTPC up 1.5%. So there's plenty of action in those stocks as well. Adani Twins, both Adani Enterprises and Ports, at least Ports up 1% or thereabouts. Adani Enterprises somewhere near the flat line. But those two came out with numbers. What's languishing? Well, you have a couple of financials. Kotak, HDFC, Axis. I see those three, and ICICI, those four. Titan also in focus on the back of possible numbers, but also not doing great, around 0.5% or thereabouts lower in trade. That's where we are at as we start to wind down. Let's quickly pull up the broader markets and where they are at. We've closed for the day. The Nifty mid cap up just about 0.5%. So the broader markets continue to outperform. The Nifty small cap largely in line. And if we can pull up the advanced decline, indicative of course, how the breadth of the market is. You'll see a bit of a reversal happening there, and pretty much 1:1 is where we've closed off at today. Let's pull up the sectoral heat map indices. The Nifty PSC, the Nifty Metal, the Nifty Auto. Those are the three leaders, and that's the trend we saw even on the Nifty 50. We discussed that. 2% higher on the Nifty PSU, which is strong nonetheless. Top laggard, the Nifty Media. The Nifty Realty Index has made a tremendous comeback. It was down 1.5% midway through the day, closing at the flat line. That's impressive. And the Nifty Energy also up 1% or thereabouts. So you had a good bunch of sectors performing fairly well. If we can pull up the BSE 500 top gainers, losers, just try and discuss a few names. Raymond, REC, Well, REC on the back of numbers, of course. Chola also up 9% on the back of numbers. So we've seen a plethora of very good numbers, aiding the stock prices. The kind of growth Chola showed, nearly 40% on an AUM, not bad at all. You're looking at Supreme Industries on the losing side, Godrej Industries and Aegis Logistics also down anything between 5 to 7%. Teamly is also down roughly 4%, and Patanjali down around 3+%. But that's all that we have for you today on this Thursday. It's a truncated week. Tomorrow's the last day of trade for the week. But with that, from Samina, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.